Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a fantastic weekend. In last week's video, I highlighted the fact that the data was showing us that the DXY was continuing to correct, and this is to a high degree, and also that market opportunities were starting to dry up. That's what the 1 month forward-looking scorecards were telling us last week. Opportunities were going to start to dry up, and we should really only be looking to take the best opportunities, and this really is a time for capital preservation as opposed to capital allocation, i.e. taking less risk, taking the best trades. And very often when the markets are overall corrective or opportunities are drying up, you don't have the luxury of trading the second best pairs, the third best pairs, the fourth best pairs, like you do when you have nice rallies. We've been long pretty much the DXY all year. And heading into this week with last week's data, you're going to see the scorecards are warning us, be patient with the DXY pairs because they are still correcting. So although opportunities are starting to draw up and we want to really be careful with our money and trading only the best setups and limiting our trading, there are a couple of opportunities which I like going into next week, which we're going to look at in today's video. So quick look at the economic calendar heading into next week because there are a few things we really need to pay attention to. The first thing to note from last week was the increase in interest rates out of New Zealand. This was anticipated by the markets. You can see it was forecasted. However, not too much took place on this last week and there were no real interest rate decision setups, which we were looking at in last week's video. And the other two things to take note of from last week was the preliminary GDP number at -1.5, so contraction in growth. And we also had inflation data. You can see the core PCE price index came out as forecasted. However, if we flick over to the second economic calendar, you can see that the core PCE price index actually came down and people were starting to talk about this as a potential peak in inflation. Now, one of the narratives I've been hearing quite a lot is when inflation peaks and it starts to come down, this is going to set up a positive bull case for the stock market and potentially a reversal in the DXY as money comes out of the DXY as it's currently acting as a safe haven asset. But the problem here is this. When you go from a scenario of stagflation, which is low growth and high inflation, and we know we've got the low growth because we just looked at the GDP data over here at -1.5%. When you go from a scenario of low growth and high inflation, otherwise known as stagflation, and the inflation part starts to roll over, what follows is deflation because you have low growth and you start to get low inflation. And it's that deflationary scenario which actually sees the US dollar outperform. And if we go back and we just have a look at the second economic calendar here, you can see also from last week the Michigan Consumer Sentiment Survey deteriorating. So this is, again, forwards looking, telling you that you're probably going to see a contraction in economic growth or you're going to see an underperformance of the economy because the consumer makes up 66% of the US economy. So the first thing to note in terms of the macro picture is we may now be looking at a peak in inflation, but does that mean we're now going to start to see another rally in stocks and we're going to see everything going back and being great in the economy? I question that. To me, it seems like we're more going to be going down into deflation from stagflation, and the Michigan Consumer Sentiment, as it currently stands, supports that view as well. So a very quick look at this week just shows we have a US bank holiday coming up on Monday. So we essentially have a 4-day week. But also we have on the Friday non-farm payrolls. And very often the week can be kind of corrective and choppy leading into non-farm payrolls. So next week is certainly, in my opinion, going to be a difficult week for trading. And again, just underscores, really I'm going to be looking for the best trades. And there's 3 main trades or pairs that I'm going to be keeping my eye on next week in the Forex markets, which we're going to go through in today's video. And the final takeaway for next week is the Canadian interest rate decision on Wednesday, which means the CAD pairs that we look at in today's video should be treated next week as interest rate decision setups. It means they're unlikely to move between Monday and Wednesday, and I'll be looking for opportunities in those CAD pairs from Wednesday or after the interest rate decision takes place from Wednesday onwards. Okay, so if we look at the scorecards heading into this week, and I mean, look at this thing on the right-hand side. This just hurts my eyes looking at it. There really is a huge lack of opportunity in the markets as it currently stands. Markets are very corrective. And the thing about this is, although, yes, it is fantastic to have lots of trading opportunities, the reality is we always need to be pivoting between allocating capital and preserving capital. So knowing when to trade more and knowing when to trade less. And that really is one of the jobs of the forward-looking scorecards, is not just to tell us where the opportunities are, but also to say when there aren't any opportunities. And that's really what it's telling you. If you've had a fantastic quarter, or you've had a fantastic now coming up to the first half of the year, these are the market conditions when you can start giving quite a lot of that back if you're not careful. So the first thing to note is the lack of opportunities in the markets as it currently stands. I always like to take trades, and I always will try and trade the best opportunities. But as I said earlier on in the video, when you get scorecards like this, you don't have the luxury of trading the second strongest and the third strongest and the fourth strongest. You really only want to be trading maybe even just one good trade or one opportunity, and exercising patience, because these kind of scorecards do change. They will start to move once again, and you will start to see currencies outperforming and underperforming to a large extent, and you will know this is when to start allocating more capital, taking more trades. So the first thing to note, and a very important aspect of these scorecards, is that they are telling us to trade less and be patient as it currently stands, and wait for some outperformance or underperformance from some of these currencies. You can see the US dollar has now started to correct with the data that came out last week added into the forward-looking scorecards, and it's telling us now to be patient with the dollar pairs. The dollar is not yet bearish. The dollar has not yet reversed, and as I said in the last two videos, we should still be treating this as a DXY correction. But this is really now telling me this correction is not going to rally to new highs next week, and it may take a couple of weeks for the current correction in the DXY to start to bottom out and start to reverse higher. So US dollar long positions are not going to be on the top of the list going into this week. The pound still remains really the best currency that I'm looking at trading, because it is scoring a -2, and this is weaker than any of the other currencies. And also to the upside, we do not have anything scoring more than +1, which is essentially bullish to neutral. So a score of +1 or -1 is just bullish to neutral or bearish to neutral, but it's still pretty neutral. Then you have bearish, strong bearish, and oversold. So even the best currency in terms of outperformance or underperformance can only muster a bearish rating, and everything else cannot really get out of a bullish to neutral or bearish to rating here. Another issue we have going into next week is not only is the pound the weakest, but another slight issue we have going into next week is, yes, the pound is the weakest and therefore technically the best short and overall the best currency to be looking to trade, but it also strengthens somewhat. So we have some momentum going from the right to the left. And really, we know the best trading opportunities come when you have strong currency which is getting stronger, or a weak currency which is getting weaker. And arguably the only one which really fulfills that category to the downside this week is the yen. So we will be looking at the yen pairs, because although it's bearish to neutral, it has turned bearish after a period of neutrality, and you can see it's down -1. So the Japanese yen is a market I'm going to be looking at shorting this week, and we'll be looking at CAD yen to the upside. I'll also be looking at Aussie yen to the upside, euro to the upside. You may be saying, well, why not US dollar to the upside? Well, because the US dollar has got a score of -2 here, so it's actually moving this way, and it's moving this way fairly strongly. So although the dollar actually retains the top spot here, I would prefer the CAD, the Aussie, and even to some respect the euro, because this is strengthening, even though it has the same score pretty much as the dollar. And another takeaway here is, as I've said many times in the video, is when you have the US dollar and the euro both positive or both negative, this is telling you the overall market condition is corrective, and to preserve your capital, trade less, and even if you want, you don't have to trade at all. But I personally always like to take a couple of trades. So just to summarize here, the best opportunities that I see going into next week, out of really a bunch of not fantastic opportunities, or another way to look at this is the cleanest shirts out of all the dirty shirts, is pound shorts and Japanese yen shorts, for reasons discussed, alongside CAD, Aussie, and euro long positions. So we'll look at CAD yen to the upside, as I said, Aussie yen to the upside, euro yen to the upside. We'll also look at pound CAD to the downside, pound Aussie to the downside, and euro pound to the upside. And we're also going to look at a couple of markets which we don't usually look at, which I do think may offer some of the best opportunities next week. And that is pound Mexican peso to the downside and pound Polish zloty to the downside as well. Okay, so let's have a look at the individual currencies very quickly. And we're looking on the daily chart as we usually do, just to get a bigger picture view of what's going on here. Recently broke above the 102.992. I've mentioned many times previously, both on Twitter and YouTube, this was a major multi-year breakout. It was the breakout of a 7-year consolidation. And what happened was, once we broke out of this, we came back and retested, and breakout traders who bought on the breakout liquidated, or some breakout traders liquidated their positions, and this is why we saw a bit of a steeper sell-off. But because of that, what that's likely to do is to cause a bit of a larger correction. Maybe we come back and retest it and we kind of consolidate under the 102.992. So when you consider the technicals here, alongside what the scorecards are telling us going into this week, I wouldn't be surprised to see a couple of weeks of consolidation in the US dollar. And it means the US dollar pairs are pretty much going to be off the table heading into next week and possibly even the week after. So patience required on the DXY. When you have a 7-year breakout and you're just looking at this on the daily chart, even a couple of days is nothing in terms of a 7-year breakout. And I wouldn't be surprised to see some disagreement around this level before the market resolves itself one way or the other. Now, which way is the DXY going to resolve itself? Is it going to continue the breakout to the upside? And are we going to rally into a major breakout? Or are we going to start to roll over here and this becomes a failure to break out and a resistance, 7-year resistance even at the 102.992? Well, based on what we discussed at the beginning of this video in the economic calendar, the macro data points to a further breakout. Why? Because if we're heading into a deflationary scenario where the consumer starts to tighten its belt, which is what we're seeing in the consumer sentiment surveys, and alongside that we have inflation rolling over, that's going to give us a deflationary scenario which tends to see the DXY outperform. So as it currently stands, and as always, I will always change my mind when the data changes. I don't have any preference when it comes to being long or short the dollar, and nor do I have any desire to hold on to a bias if the data changes and just to hold that in the face of a reversing market. But as it currently stands, the DXY should be treated as a correction, not a reversal. Next is the euro. Now the euro came back and actually broke above the 1.06710, and this was the multi-year breakout level in the euro that we came down and broke below when we broke above the 7-year breakout in the DXY. And we broke above and we kind of pulled back and retested. But again, we're looking at this on a daily chart, and this is a multi-year breakout. This is really nothing but a little bit of volatility on higher time frames like the monthly, the quarterly, or the yearly even. So as it currently stands, just as with the US dollar, I am treating this as a pullback. And what I would really like to see to get short on the euro overall again would be a breakdown below this level, because anybody who bought this little dip here, I'll just get rid of this, you can see it's a bit clearer. You see people bought on the pullback and they're buying, anticipating this to go higher. They've probably got stop losses here. So when this comes down and breaks this level, we could see some capitulation to the downside, and that would likely kickstart the technicals once again in the euro. As it currently stands, we're above this level, so you can see we're kind of bullish to neutral in a way. And although a major reversal in the euro would come back above the 1.06710, it's still a little bit too early to claim this as a major reversal. You would need to see some real momentum coming in above this level. And I would really be looking at the forward-looking scorecards to be outperforming in terms of the euro as well, maybe 2, 3, and possibly even higher in the scorecards. We're not seeing that, so I would expect this to kind of consolidate and again, perhaps be a bit neutral until the DXY resolves itself. Next is the pound. Now the pound has pulled back and it's currently sitting at key area of resistance of 1.2615, which I highlighted previously. And again, this really just looks to me to be a correction after very strong momentum. When you have a number of weeks or days of very, very strong sell-off, the market has to pause, it has to breathe. And I am still treating this as an opportunity to look for potential shorts and for this to roll over. Maybe it even comes a little bit higher, does what we saw in the euro. Maybe it tests and then breaks down like this and starts to come down. But I am overall looking, and the scorecards are suggesting we should be looking for further declines overall in the pound. Next is the Swiss franc. Now last week, pound franc to the downside was a market we looked at, and it was actually the best performing market last week outside of the dollar pairs, which really corrected. They didn't really do much. And you can see here in the Swiss franc, I discussed this last week, that the market was for sure just looking like it's correcting. And very, very rarely will you see a market bottom like this. This is just a very difficult piece of price action to trade because it just goes straight down and straight up. And you don't really get any pullbacks on the way down, no pullbacks on the way up. However, what I said last week was, on a relative basis, although this is correcting, if it continues to correct, we will see a little bit of relative Swiss franc strength. And we did somewhat see that, although again, because it's only correcting, there was no real strength. We kind of closed down in pound franc. New Zealand franc last week did come down to its target, was another market we looked at, but it also reversed higher. And that's what you see when you're trading a market on relative strength rather than outright strength. So I am looking for this to resolve itself to the downside and make new lows, but it's probably also going to have to roll over like this first and start to break lower. We aren't seeing any momentum to the downside yet, and this could remain corrective. So not particularly bullish, not particularly bearish on the Swiss franc as it currently stands. Next is the yen. Now, the yen also recently broke out of a major breakout level here, highlighted previously. And I said to you that this was near-term bullish, but it was just corrective, and we're possibly coming back just to retest this. Well, heading to next week, the yen pairs are something we're going to look at because, as I said, really just one of the cleanest shirts out of a number of dirty shirts. It's not a particularly fantastic market to be trading because it's just correcting. But you can see even here, the strength of this market to the upside is very minimal. I mean, it's just very, very choppy compared to the Swiss franc, which has done this, even though it's correcting as well. The Japanese yen is just kind of doing this. So I am looking for potential yen short positions. Maybe we come up and test this before we start to roll over. But this is now in the area where I'd be looking for some weakness coming into the yen. Next is the CAD, somewhat buoyed by the rally in crude oil, which we've been looking at in previous videos. Also sitting at a key area of resistance highlighted previously. So we may start to come down from this level as well. But relatively speaking, I still think the Canadian dollar, based on what we're seeing in the scorecards, is one of the better relative plays. So I am going to be looking at potentially pound CAD to the downside. Also going to be looking at potentially CAD yen to the upside. But just bear in mind, as with pound franc last week, this is more of a relative play. There is no real strength in the Canadian dollar as it currently stands, and so I wouldn't go too crazy. Next is the Aussie. You can see we're just correcting. This really is just looking like a bear flag setup, and I would, as it currently stands, be expecting this to roll over to the downside. It is relatively one of the strongest currencies, so I am going to be looking at Aussie yen to the upside as something. You can see this is not even highlighted in gold because I still think this is not a fantastic opportunity, but it's a opportunity. And we'll also be looking at pound Aussie to the downside, but again, it's just a relative play. And finally, New Zealand dollar. New Zealand dollar is also, as it currently stands, correcting, but look how big of a sell-off we had here. This thing needs to, I mean, this could easily come down and continue to correct up like this. So again, you can see this is not particularly bullish, not particularly bearish, and it's another market which is just correcting. In fact, when we look at all of these, you can see all of these markets are currently in the process of correcting. So the only thing we can do in this scenario is which ones are relatively stronger or weaker compared to each other. Okay, so let's look at the markets themselves, starting with crude oil. Now, crude oil is a market I've been highlighting to the upside in previous videos, and we are now approaching the target set out previously at the 118.20, so we had a really nice move in crude oil. Once this target is taken out, for anybody not already involved, any pullback like this would be viewed as an opportunity to look for long positions into the 118.20. What's more likely to happen is that we take this target out first and then we start to correct, in which case I'm going to be looking to the 125.95 as the next target to the upside. Aside from being a good opportunity in and of itself to be buying crude oil or to be long crude oil, this is also supportive of oil exporting countries' currencies such as the Canadian dollar and also the Mexican peso, which we're going to be looking at in the form of pound mex to the downside. Okay, so just quickly before we move on to the yen pairs here and then the pound pairs, I want to also look still at the dollar pairs because I am keeping my eye on the dollar pairs. I am still bearish on pound dollar. But what we need to see, because of the depth of the correction, we need to see a much bigger reversal to the downside first. And that would look something like this. You can see, for those of you who like your trend lines, we are just correcting. There has been no real reversal in these markets. So I am looking for this. And if these markets start to break down this week, I am going to be looking for short opportunities, probably not this week, but next week in the dollar pairs. So keep an eye on these markets. I'm going to look through them now. What I'm looking for is a breakdown like this with momentum, and any pullback like this may be the case next week. If this is the case next week, the opportunity will be down to lows and then onto the 1.2081. So again, I'm going through the dollar pairs here, not because I'm looking at trading them this week, but I'm just showing you over the next couple of weeks, perhaps, what I'm looking at in these markets in the terms of the dollar pairs. Euro dollar, we're currently above the 1.06359, which is the major breakout level. So technically speaking, I wouldn't really want to be short this just yet. I wouldn't be surprised to see some consolidation, but what I'd really like to see is a breakdown like this, perhaps a head and shoulders. We break down below it, and then this would be the opportunity below the 1.06359 to start to look for further declines in euro dollar. But again, we're unlikely to see that all take place next week. Perhaps we get the break lower next week, and then the week after we can start to look at shorts once again in this market. New Zealand dollar, again, no real breakdown with momentum out of this current correction. This has just continued to correct to the upside. So any breakdown in this market, perhaps next week we break down like this and start to flag, that's going to be the opportunity to start to look for shorts down to the 0.6158. But again, we need to see some momentum coming into this market first, because as it stands, this is still correcting to the upside. And finally, for the dollar pairs, Aussie dollar, I am still looking for this to come down to the lows and then onto the 0.6812. But again, we need patience. We can't force the market to move. We can only sit and wait patiently for the market to move. So any break lower in this market, perhaps next week, would set up an opportunity to look for further declines, albeit not next week. I don't think this will come down to the 0.6812 next week, but over the next couple of weeks, I'm looking for this market to come down to the next key of support here at the 0.6812. So keep these dollar pairs on your watch list. I am looking for breakdowns in these markets, but may need a couple of weeks before these moves play out. Okay, so moving on to the markets, which the scorecards themselves are showing we have a relative edge in going into this week. The first one is CAD yen. You can see with CAD yen, we've had a big correction in CAD yen. And what we started to do is here, we've started to flag, and we are forming an inverse head and shoulders here. And the inverse head and shoulders, if we take this right shoulder down here, is starting to break out. So any pullback in this market, I would be looking for further advances into the 101.10, which is actually the confirmation level. And if we start to break through here, I'm going to be looking up towards the 102.910. Because CAD and yen are not particularly strong or weak currencies this week, I would look for the more conservative target here at the 101.10. Aussie yen also forming a little bit of an inverse head and shoulders, although the way this came down here with momentum and the correction of this is not a particularly fantastic setup. We may just come up and take out the 92.25, but overall it looks like this is going to resolve itself lower. But for the near term, Aussie yen to the upside is something I'm looking at. If we take this near term correction here, you can see we're breaking out now with momentum. So any pullback would be viewed as an opportunity to look for long positions into the 92.25. I haven't highlighted it in gold because it's really just not a fantastic setup. It's just one of the better setups that there is going into next week. Next is Euro Yen, and I've put these trend lines on here. I don't usually use these trend lines, but just to visually give you an idea of where we're sitting in these markets, we're starting to break out of these corrections. Unlike Aussie Yen and CAD Yen, you can see we don't have any momentum. This is actually still kind of stuck in this range here. So what I'd like to see next week, if I am going to be trading Euro Yen, I want to see some strength come in like this. And if that takes place, any pullback like this would be viewed as the opportunity to start to look for long positions into the 138.27. But look for some momentum first, otherwise this runs the risk of just staying corrective and chopping, especially as these are not outright strong or weak currencies. We're just looking at some relative strength here. Okay, so moving on to the pound pairs, starting with pound mex. We took out a previous target. I did have this market in previous videos at a 24.710, although we weren't looking at it last week. Coming into this week, I do like this market as one of the better opportunities. It's worth noting that overall, I don't think any of these are phenomenal opportunities, but it's one of the better opportunities going into next week. And we do have some momentum now. We've started to break out of this near-term correction. So any pullback in this market is going to be viewed next week as an opportunity to look for shorts into the 24.56. And if we break through here, onto the 24.38. Keep an eye on pound mex because it's one of my favorite opportunities going into next week. Next is pound PLN. Now, pound PLN has had this bear flag type pattern, and we've started to break out of this now to the downside. And this is one of the reasons why I like this alongside the pound being pretty weak. And the Polish zloty is actually finding a bit of strength because of the recent sell-off in the dollar index. You'll see in the emerging markets like the MEX, like the PLN, starting to outperform a little bit off of that weakness. So any pullback going into next week would be viewed as an opportunity to look for shorts into the 5.2380. And this is a market alongside pound MEX. These are probably my two favorite markets. CAD yen in third place, where I think we could potentially make some money in the Forex markets next week. Next is pound Aussie. So we have a kind of bearish currency, albeit with a little bit of bullish momentum because it went from -3 to -2, vis-a-vis a bullish to neutral currency. So going into this week, any break lower, and I'd really like to see this break this low with a bit more momentum like this first, but any break lower is going to be viewed as an opportunity to look for a pullback, and I'm going to be looking down towards the 1.7451. Next is pound CAD. Pound CAD has also been correcting, and what it looks like now is we're failing at this double bottom. So we had a double bottom reversal pattern, but it's an overall downtrend, and these technicals were not really backed up by any of the underlying macro. And we're seeing the pound is still weak. The CAD is actually relatively strong. And so I'm anticipating this double bottom breakout to fail. Any break lower, especially if we can start to break out of here with momentum like this, I'd like to see a sell-off first. Any pullback then would be viewed as an opportunity to look for shorts down towards the 1.5737. And this is a market we've been looking at in previous videos, but again, it's just been correcting. So a little bit of patience on this. If we can get some momentum breaking to the downside, I'm going to be looking at this for potential shorts next week. And the final pair here we have is Euro-Pound. Euro-Pound is not a particularly attractive market. I do think there's a chance we come up to 0.8594, but I prefer Aussie longs and CAD longs over and above Euro longs next week. And that's why I've put the Euro pairs at the bottom of the three here out of CAD Yen, Aussie Yen, Euro Yen, and Pound Aussie, Pound CAD, and Euro Pound. But any pullback in this market, what I'd like to see is, as always, when you have kind of neutral currencies or not really any strong or weak currencies, you want to see some momentum. So any momentum break to the upside next week in Euro Pound would be viewed as an opportunity to look for longs into the 0.8594. Okay, so wrapping up with gold, silver, and Bitcoin, starting with the gold-silver ratio. The gold-silver ratio has really been outperforming to the upside, and we've been focused on silver shorts. And silver shorts have been a fantastic play up until the last 2 weeks. When the dollar started to correct, silver's kind of corrected as well. We're going to look at silver. And the gold-silver ratio has now also corrected, like a number of other markets, in pretty much all of the markets, even the stock market's correcting. And so on balance, because the overall trend is to the upside here, I would favor this resolving itself to the upside and continued medium-term weakness in silver over gold. However, right now you can really barely put any difference between the two because it's stuck in a range. And when you have a market in a range like this, you can see gold and silver effectively kind of outperforming each other very near term. One goes a little bit stronger, then the other one goes a bit stronger, etc. So I don't have any strong bias overall as to whether gold and silver is better or worse in terms of being long or short. But once this does break out, it's more likely going to break out in the direction of the overall trend, meaning I would still, on balance, in the medium term, favor silver weakness. Okay, so the next market is gold. Now, I do still favor gold to the downside, but until we start to see the DXY strengthening again in the scorecards, gold shorts can be a bit choppy and they're not fantastic setups. We do have a bit of a mini head and shoulders here, so maybe we start to break down this week like this. If we do break down this week, I'm happy to miss this opportunity. If you want to short gold on a kind of neutral dollar, then that's entirely up to you. I prefer to wait for the dollar to be a tailwind. In other words, if I'm looking for gold shorts, I want to see a strong dollar and vice versa. And so if this does sell off this week, and if we do break out below the head and shoulders confirmation point, which is right here, I'll be probably looking at the end of the week or following week for this move down to the 1789.28. But like with all of the dollar pairs, this is probably going to require a bit of patience, and I want to see DXY strengthening in the scorecards before I get any real conviction on DXY long positions. Next is silver. Now, what's interesting about silver is we've been correcting, we've broken back above the multi-year breakout level, because this was another market which broke down below a historically very key or major breakout level at the 21.45. Again, as it currently stands, we're on the 4-hour chart. This is an intraday chart. This really should just be viewed as volatility in terms of the bigger picture. And what I would like to see is I'd like to see silver breaking back down below this level. And again, this is a market which is most likely going to require patience, because either this continues to break higher, and if we see this breaking higher above the 21.45 over the next week or so, and at the same time the DXY weakens in the scorecards, we can start to view this as potentially a false breakout and a reversal. But as it currently stands, because the DXY is still kind of bullish to neutral, I would favor seeing a breakdown in silver, especially based around the macro backdrop we talked about at the beginning of the video. And any breakdown below silver and the 21.45, that would be the opportunity to once again start to look for shorts into the 20.51 and then onto the 19.66. So like the other dollar pairs, not really looking at trading this so much as next week, but I'm keeping my eye on these dollar pairs over the next 2, maybe 3 weeks. And finally, we have Bitcoin. Now, what's a little bit worrying in terms of Bitcoin is we also broke a major breakout level at 32,935. However, unlike the other markets, Bitcoin has failed to reclaim this level with the DXY selling off or weakening or correcting. So if Bitcoin cannot rally with a weaker dollar, if the dollar starts to bottom, it starts to reverse higher, and we start to see new highs in another attempt to break out above that major breakout level, then what do you think is going to happen to Bitcoin? It's going to sell off, and it could sell off quite hard if the dollar starts to strengthen. So I am bearish on Bitcoin. Again, another market which is just kind of correcting, and this is forming what's known as a descending triangle. So if we start to break below here, perhaps pull back and retest, this would be the opportunity to look for shorts into the 24,307. Okay, so just to clarify in some bullet points of my plan heading into next week. First and foremost, my plan is to restrict my trading, limit my trades because the markets are corrective, they are choppy, and really the key is not to give back gains that have been made throughout the year over the next week or so when the markets are choppy. The second thing I'm going to be focused on, and maybe I could have ordered these actually higher up, is the pound pairs. I do like the pound pairs, especially PoundMex, PoundPLN to the downside. I think they represent the two best opportunities to make money next week. After that, I like the yen pairs for potential long opportunities, and my favorite out of those is CAD yen. And the dollar pairs, I'm not really looking at trading next week, but I've left these in here and analyzed them, including gold, silver, and Bitcoin, because I'm anticipating some strength coming back into the dollar over the next few weeks, and I'm essentially keeping these on my watch list and just letting you know what I'm going to be looking at over the next few weeks in the dollar pairs. So that is it for me for this week, guys. As always, I hope you enjoyed this video. If you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.